On Friday, March 6th, after hours, HIMS surged nearly 40% on reports of a settlement and partnership with Novo Nordisk, with the settlement reducing legal and regulatory uncertainty in weight loss segment and the acquisition of Eucalyptus adding international scale. It is necessary to reassess the consolidated valuation in light of a materially changed business mix, lower perceived risk, and a broader strategic footprint. The key message is that HIMS and HERS has entered a structurally de-risked phase that justifies a valuation re-rating. The company's profile has shifted from one shaped by regulatory volatility in its weight loss business to one supported by a more stable pharmaceutical distribution model. With the Novo Nordisk Settlement reducing legal uncertainty and Eucalyptus adding a second growth catalyst, the revised valuation approach applies a sum-of-the-parts methodology and supports a consolidated 12-month price target of $42 per share. The settlement with Novo Nordisk resolves a significant U.S. patent litigation overhang tied to HIMS and HERS weight loss offerings. The dispute had intensified in February 2026 and became a major source of market concern. Under the agreement, Novo Nordisk dismissed its lawsuit without prejudice, while HIMS and HERS agreed to realign its operating model. The strategic importance of this outcome is that it reduces a major source of legal risk and positions HIMS and HERS as a preferred distribution partner for branded obesity products. Following the settlement, HIMS and HERS is repositioning the weight loss vertical around a more compliant and lower risk model. The company is moving away from broad reliance on compounded semaglutide and toward branded Wegovy and Ozempic, while compounded treatments are limited to narrower, clinically necessary situations. From a business standpoint, this transition preserves participation in a high-demand category, while improving regulatory alignment and reducing the risk attached to the prior model. This operating shift also changes the economics of the weight loss segment. Rather than relying primarily on product margin from compounded medication, the business transitions toward a care fee model in which medication revenue is largely pass-through, and HIMS and HERS earns high-margin revenue from clinical oversight, consultations, and platform access. The result is a model with lower drug-related margin capture but stronger structural profitability in the care component and a more scalable revenue base. The second major strategic catalyst is the acquisition of Eucalyptus, which adds international diversification and clinical infrastructure. Eucalyptus brings a multi-country footprint across Australia, the UK, Germany, and Japan, along with meaningful customer scale and a revenue run rate exceeding $450 million. This broadens HIMS and HERS beyond the US market and reduces dependence on a single regulatory environment, while also expanding the addressable opportunity for its specialty care platform. The structure of the Eucalyptus transaction is designed to preserve balance sheet flexibility. The deal includes roughly $240 million in upfront cash, with the remaining consideration deferred or tied to performance milestones. HIMS and HERS also retains the option to settle a significant portion of the deferred amount in Class A shares. This financing structure lowers immediate cash strain, aligns incentives with future execution, and allows the company to use both existing liquidity and future cash generation to support the transaction. Before incorporating these strategic changes, the underlying 2025 operating results already demonstrated substantial platform scale. HIMS and HERS generated $235 billion in revenue in fiscal 2025, representing 59% year-over-year growth. The subscriber base exceeded 2.5 million users, and monthly revenue per average subscriber rose to $83. These results show that the business had already built strong demand, engagement, and monetization even during a period of significant regulatory noise around weight loss. Looking ahead, management guided to 2026 revenue of $2.7 billion to $2.9 billion and adjusted EBITDA of $300 million to $375 million. Importantly, this guidance excludes contributions from Eucalyptus, making it a standalone operating baseline rather than a fully consolidated upside case. The outlook also assumes continued participation in personalized weight loss treatments, reinforcing that the company is not exiting the category, but shifting to a model with greater compliance and lower legal exposure. Even after the settlement, the company still faces ongoing regulatory and legal oversight. The presentation identifies SEC and DOJ inquiries related to prior disclosures and historical marketing practices, as well as a consumer class action tied to advertising claims around compounded GLP-1 products. The significance of this slide is that the business is materially de-risked but not fully risk-free. Residual oversight remains an important factor in how investors should frame the post-settlement valuation. Competitive pressure is also a meaningful part of the remaining risk profile. HIMS and HERS continues to face competition from large pharmaceutical incumbents, including Eli Lilly, as well as lower-cost pharmacy and distribution models such as Amazon Pharmacy and Cost Plus Drugs. That means the company must continue to differentiate through convenience, personalization, and the consumer experience in order to defend pricing and maintain customer loyalty in an increasingly crowded market. To reflect the new structure of the business, the valuation is built using a sum of the parts framework rather than a single blended multiple. This method separates the company into three components: the core specialties platform, the international segment added through Eucalyptus, and the de-risked GLP-1 vertical. This is an appropriate approach because each component has a different growth profile, risk level, and profitability structure, especially now that the legal and commercial dynamics of weight loss have changed materially. The first valuation component is the core specialties business, which serves as the floor value for the company. This segment includes categories such as hair, skin, sexual health, and mental health, and generated roughly $1.80 billion of 2025 revenue with substantial operating cash flow. Using the assumptions in the report, this segment supports an intrinsic value of $35.84 per share on its own. That is important because it shows that a large portion of enterprise value is grounded in the existing subscription platform, independent of the weight loss narrative. The second valuation component is the international segment contributed by Eucalyptus. Based on the report's assumptions, this business adds approximately $3.60 to $4 per share in value. That contribution reflects both current scale and strategic significance, since Eucalyptus provides exposure to multiple markets with distinct healthcare and regulatory structures. In effect, the acquisition adds not only revenue and customers, but also a geographic hedge that broadens the company's long-term operating base. The third valuation component is the de-risked GLP-1 segment, which is now valued at roughly $5 to $7 per share. The rationale is that the Novo Nordisk Settlement transforms the economics and risk profile of this business from a contested compounding model into a more durable branded distribution and care fee model. While the margin structure changes, the segment becomes more credible, more sustainable, and more defensible, which supports assigning it positive standalone value in the post-settlement framework. When these three components are combined, the analysis arrives at a gross intrinsic value of $45.84 per share before dilution. After accounting for expected dilution related to the Eucalyptus earnout and deferred payment structure, the consolidated 12-month price target is set at $42.0 per share. This target reflects the value of the established core business, the incremental contribution from international expansion, and the re-rated value of the weight loss segment under a lower risk operating model. The final conclusion is that HIMS and HERS now has a more credible foundation for its long-term growth ambitions. The Novo Nordisk Settlement reduces the primary legal overhang, while Eucalyptus expands the company's international reach and diversifies its revenue base. Together, these developments support a more favorable risk-reward profile and strengthen the path toward the company's 2030 objectives of $6.5 billion in revenue and $1.3 billion in adjusted EBITDA. The broader investment case is now built on a combination of core platform stability, branded weight loss participation, and international scale. Disclaimer: I long HIMS. This is not investment advice. This is for education purposes only. Do your own due diligence.